If you're using Trading 212, whether you're a complete beginner or you've been using the app for years, there's features on the app that a lot of people don't know about or just aren't using properly. So in this video, I'm covering 11 Trading 212 tips that you might not know about. I'm covering everything from common beginner mistakes to even parts of the app that experienced users may have missed. So there really is something in this video for everyone. We're going to get straight into the tips on this video, but before we jump in, if you haven't yet got Trading 212, you can scan the QR code on screen or sign up via the link in the description to claim free fractional shares worth up to £100 when you sign up and make a deposit of at least £1. And if you've already got the app and signed up within the last 10 days, don't worry, there is another way that you can claim free fractional shares. I'll show you that later in the video. On Trading 212, there's 4 different types of account, and we're talking about investing in this video. So the 2 types of account we're focusing on in this video are the invest and stocks ISA accounts. But what's the difference between these two? So the invest account is basically shorthand for a general investment account. You can invest into stocks and ETFs, you can hold cash in the account, but the difference is any gains, dividends and interest you make in the invest account may be subject to tax. This is because it's not a tax wrapper. On the other hand, stocks ISA is a tax advantaged account. It's a stocks and shares ISA. You can deposit up to £20,000 per tax year, and then any gains, dividends or interest you make within the stocks ISA are not subject to UK tax. Now, a few things that confuse people here is that the £20,000 deposit limit is just that, it's a deposit limit. Your gains and dividends don't count towards that £20,000. And then each tax year on the 6th of April, it refreshes and you have another £20,000 tax year deposit allowance. I do sometimes come across beginners using the invest account rather than the stocks ISA when they are a UK resident and they could have used the stocks ISA account. And that is a shame because it may lead to them incurring unnecessary taxes. And me personally, I only use the invest account for investing once I've used my stocks ISA allowance. And I don't do that too often because £20,000 deposits per tax year is a very generous allowance and very hard to use. The 2 other types of account on Trading 212 are CFD and cash ISA. So CFDs are complex instruments. It's for trading with leverage, very risky, and it's not for long-term investing. I personally do not use this account. Trading 212 themselves state that a high percentage of people do lose money when trading CFDs. And then the cash ISA is like the stocks ISA in the sense it's a tax wrapper and it shares the same deposit allowance, but it's just for cash. It's in the name, just for holding cash. Whereas with the stocks ISA, you can invest your money. Cash ISA, just for holding cash, earning tax-free interest. But as I say, we're focusing on long-term investing in this video. So for the rest of the video showing all the tips, I will be inside the stocks ISA and or invest accounts. On the app, there's actually a few different ways you can deposit cash. So first of all, on the homepage, when you're in your portfolio, you can simply click the cash button here and that will bring up the deposit menu. Or on the portfolio tab, you can see cash here as well. Just click deposit. That's another way to access the deposit menu. Or you can go to the menu page, 3 lines here, and then go to deposit funds there, big button. Or another way, manage funds and then deposit. So you can see there's 4 different ways you can actually get to that deposit screen. Now, importantly, on the deposit menu, there's a few different ways you can deposit. You can either deposit via bank transfer, instant bank transfer, or standard bank transfer, or you can deposit via card or Google Pay or Apple Pay. And I personally would always deposit via bank transfer or instant bank transfer because there's no fees associated with this. However, if you deposit via card, after the first £2,000, there is a 0.7% deposit fee. So the way I see it, there's no point paying that deposit fee if you don't need to. So depositing via bank transfer or instant bank transfer, it's in the name, pretty instant, just uses open banking and gets that deposit in straight away. So just be careful here. I did actually have a comment recently telling me that they didn't like the deposit fees on Trading 212, and I had to explain to them it's probably because they're depositing via card and not bank transfer. I did say there was a way of claiming free fractional shares if you've opened your account in the last 10 days, and that is you can use a promo code. So if you go to the menu page, 3 lines at the bottom right, scroll down to the use promo code section, and as I am an affiliate partner of Trading 212, you can use my promo code TOM to claim your fractional shares worth up to £100. Now, as I mentioned, that is an affiliate code, so I do get something too for full transparency. But if you do use that code, that's the way of claiming those fractional shares within 10 days, even if you didn't sign up via a referral link. You can also activate interest on your uninvested funds on Trading 212 in the invest and stocks ISA accounts, and you have to activate this yourself. By default, it won't be turned on. So to do this, you go to the menu page, then interest on cash. And then at this point, if you haven't done it before, you'll get a notification to enable interest. And the reason why you have to enable it and agree to the terms is you're agreeing to have your cash placed as well as cash in banks, but also in something called qualifying money market funds. And now, qualifying money market funds are a type of investment, but they're investment funds that hold short-term, highly creditworthy debt from financial institutions and governments. So it is considered a very low-risk investment, but it is an investment nonetheless. So that's why you have to agree to the terms. And there's a really helpful FAQ that I'd recommend reading. They tell you how they hold your cash, what a qualifying money market fund actually is. And just make sure you read those terms and you're happy to have your cash placed in qualifying money market funds to enable you to earn interest on your uninvested funds. I do have a small amount of cash in my invest account, not my stocks ISA, but here I can show you that they do give a detailed breakdown of how your cash is currently held. So you can see that my £12 that I've got in cash is split across a few different banks, as well as at the bottom you can see there's some in qualifying money market funds, and it's diversified across a lot of different qualifying money market funds. So it is a nice feature to see where it actually is being held. This next tip is all about researching your investments and specifically how to research ETFs. So there's a lot of built-in research tools for ETFs on the Trading 212 app. For example, if we just go on search and we'll go to most popular ETFs, and I'm just going to use the top one here as an example. We'll use the Vanguard S&P 500. So you can see you'll have the performance chart at the top, and then you'll have an AI analysis. But importantly, below this, you can see the expense ratio. So that's the total expense ratio, the annual cost of owning this ETF. And some people might ask, how do you pay this fee? And it's not a fee you ever know that you're paying. It's basically deducted pro rata from the assets under management of the ETF. So it's taken away in the background by the fund provider. You don't know you're paying it, but it's also important to be aware of, as ETFs do vary in fees quite wildly, and you want to make sure you're not overpaying. You can also see assets under management, so the total assets under management of the ETF. In general, large ETFs can be more liquid, they have tighter bid-offer spreads, and there's little chance of the fund provider closing the ETF if it has a lot of assets under management, because it's probably quite profitable for them to run. On the other hand, if there's a ETF of a very small fund size, they may eventually at some point liquidate the fund because they may decide it's not economical for them to run. Just something to be aware of. You can also see dividend frequency. So in this case, this is an accumulating ETF, so it automatically reinvests with dividends within the fund. But if it's a distributing ETF, it will tell you whether they pay out dividends annually or quarterly. There will also be a dividend yield figure here as well if it is a distributing ETF. You can see annualized past performance. Then my favorite feature, you can see the fund allocation. So this is an S&P 500 ETF. So you can see all the American giants that make up the fund and their weightings, as well as a sector breakdown and a country breakdown. Also, importantly, if you click on the three dots in the top right, you can then see instrument details, and here you'll be able to see other listings of the same ETF on different stock exchanges, but also access the key information document. And this is important to do your further research and read more about the ETF. There's a few different ways that you can see your returns in the app. So on the Portfolio tab, you can see at the moment I've got a rate of return, and this is a money-weighted rate of return. And when you click onto it, it explains what that is. So rate of return adjusts for the size and timing of individual investments or withdrawals using the money-weighted rate of return. Older and larger investments have a greater impact on your rate of return than recent or smaller ones. And this total return and rate of return will include your realized gains or realized losses from positions you've previously sold. It'll also include dividends and interest that you've earned. However, if you just want to see your unrealized result, which is the gain or loss on your open positions, not taking into account your previous positions you've sold or not taking into account dividends, you can actually click the cog here and then toggle off the include cash. There you have it. You can just see the unrealized result. And then this here is simply the profit or loss on your open positions. There's no right or wrong return you want to see here. I personally like to see the money weighted rate of return. I think that's more useful for long-term investors, but it is there, toggle between, and whichever one you prefer. One of my favorite features on Trading 212 is the asset allocation, and you can access this by clicking investments on the homepage or go to the Portfolio tab and then scroll down to your asset allocation. Now, on the outside of the asset allocation, you can see the proportion of each asset and the daily price changes. So the bigger the area each position takes up is the greater the weighting it has in your portfolio. And then obviously you can see the daily price changes. And as of recording, this is a red day, but red and green, that's part and parcel of investing. So once you click see all, you can see the unrealized result, which we saw earlier on the portfolio chart if you had that setting on, and your cost basis. But importantly, at a glance, you can see what percentage of your portfolio each investment makes up. So you can see in my portfolio, my large position by far is the SPDR MSCI All Country World ETF, 61% of my portfolio, and then a few other funds followed by some individual stocks. And the reason why this is so great to see is it really helps you see if your portfolio is balanced in the way you want it to be, if you have your target allocations, or if there's something that you have overweighted or underweighted and you realize that you have too much in that one position or you have too little in that position, it's really easy to see at a glance like this. You can also toggle to market price, which is again a way of seeing the daily price changes in your portfolio. So it's another way of seeing it. And as I mentioned, it is a red day at the time of recording. Now, this next tip is all about trading 2-on-2 pies, one of the most popular features, but we're not going to go through how to create a pie. That is pretty self-explanatory when you go through the menu, create a pie. If you go for a custom pie, just select the stocks or ETFs you want in it, select the allocation, and you've got your pie. It's just a way of grouping investments together. It's a nice way to separate investments and keep on top of them. But I want to go through some of the things that are often missed with pies, and that is how to actually manage them and certain features you may well have missed. So we're going to use my satellite funds pie as an example here. And straight away, one of the things you might notice is the return here, it says plus £2,783, doesn't match the return on the outside where it says plus £2,155. So why is there a difference here? Now, the return you see on the outside is the gain or loss on your open positions, the positions you currently hold in the pie, your profit or loss on them. However, when you click onto it, this is your money weighted rate return and your total return. So this includes dividends you may have received from your positions in the pie, but also from previous positions that you had in the pie that you may have sold for a profit or a loss. So this is your total return. It says there, total return. And then rate return, same way that you have the money weighted rate return for your portfolio as a whole, you have the money weighted rate return for your pies. And on the holdings tab, you'll see here, the holdings tab also uses the simple profit or loss on your open positions. Overview, total return, including gain or loss from previous positions you've sold, and dividends. The main thing I want to go through on pies here is that when it comes to investing in your pies, a lot of people think that you have to invest into all the positions in your pie. Well, actually, you can just choose to invest into one thing if you want to. And this is where you go to fund distribution and you can go to custom. So self-balancing, it will distribute your deposit and invest it to try and get back to your target weights. By targets is that it won't try and get back those target weights, it will just distribute that deposit as you've set the target. So if you deposited £1,000 and you have two positions in a pie that are 50% each, it'll put exactly 50% in each of those positions. But if you just want to invest into one part of the pie, you click custom and you can just do it like this. You just go 100% and set them all to 0. And this is how you invest into just one part of the pie. Now, this works both ways. You can also click withdraw and do it by custom. And this is how you can sell one part of the pie without having to sell the whole pie. And then finally, the last pie tip I want to go over, is that a lot of people miss this one. 3 dots in the top right, you can import and export investments from the pie. So say, for example, you have a stock or ETF outside of the pie that you want to bring into the pie, click import investments, and it will show up, you tick it and then import it. It's not showing for me because I don't have any investments outside of a pie at the moment, but this is a great way as if you've created a pie and you have some previous positions and you want to bring them in, you can do that. And then also, if you decide you don't want something in the pie anymore, click export investments, tick what you don't want anymore, and then click next and export. I'm not going to do it because I don't want to export anything from the pie. On the portfolio tab, you can also reorder your screen. And I think this is super important to have the things that matter to you at the top. So you click the cog in the top right and click reorder sections. And you can see I like to have investments and then asset allocation and then ISA allowance and then AI analysis near the bottom. This is how I like to have it. For me, the most important things are my actual investments and then the asset allocation to the daily price changes and the proportion that each investment has. But you can play around with this to make sure what's important to you is near the top. I think by default, the AI analysis is near the top. I personally don't use it, so I've dragged it near to the bottom. My favorite theme for the trading 2-on-2 app is the navy theme. I think by default, it might be the light theme, but to change your theme, all you have to do is go to the menu page and then go down to settings and then click theme. And then here you are. You can go by your system, device settings, light, black, or navy. So play around with that, decide which one you want. I personally like the navy theme. This last tip is all about reducing the noise, keeping the noise away, because if you're a long-term investor, you probably don't care about price changes in your investments in the short term. If you're just buying, holding, you intend to hold that investment for years, you may not want to have those distracting price alerts. So to turn those off, you go to the menu page and then scroll down until you see price alerts here. And then you can see by default, it'll probably have set a price alert for every investment you hold. So I've got them on because I don't mind them, but say for example, I just don't want to hear these, especially if I'm an ETF investor for the long term. Perhaps I don't want price alerts. I can just click on it and then click the bin button up there to remove it. And you can remove all the price alerts. And you can also go to your settings, notifications, and you can turn off some of the notifications you get, because by default, you might be getting some notifications for market volatility or news. And again, if you're a long-term investor, you don't want to hear any of the noise, you can turn these things off. And it can be quite helpful for people who just want to get on with their lives and they're not worried about the daily market movements or daily market news. So that was 11 trading 212 tips, from common beginner mistakes to even things that I think experienced users of the app may have missed. I hope it was helpful. Let me know your thoughts in the comments below. And as always, thank you for watching.